This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Thomas Cali of Polaris Advisory. Thomas, thank you for joining us.
Thank you for inviting me. It's a pleasure to be here today.
Great. So what was your background before investing in early stage companies? What did you do previously?
Well, actually, I have a different career path than most people. Usually most people go from industry into Wall Street. I went from Wall Street into industry and then back out to Wall Street again. I worked with Merrill Lynch for a short period on the retail side, and then I worked for Prudential Securities on the institutional side with a guy who managed about 20% of the UAW pension money. And then I worked directly with a short seller and an options trader. So I've had a lot of experience in the technology, telecom space, and healthcare. And I got involved with, launched a company called Polaris Advisory, TMC Group, Inc., about 17 years ago because I met another executive that was doing nearshore services in Mexico, and I was doing offshore services in India. And he said, "What are you doing in industry? You should help me scale a company from private to public and introduce me to some of your hedge fund and some of your institutional family office investors." So that's what I did. And that's kind of where I am today, is that I merged both my industry background plus my Wall Street background to help out family offices. I represent about 4 family offices, and then we scale companies from private to public. Usually companies that are high growth mode or specific industries like real estate that we know well, healthcare, some telecom technology plays as well. And that's how it all came to be Polaris Advisory. And the reason we chose Polaris Advisory is because we didn't want to fully disclose who the family offices are. So there's 2 of them in Nevada, a couple of local family offices in New Mexico where I live in Santa Fe, and then also my direct investment partners out of Austin, Texas.
Well, great. So what excites you right now?
I like space technology services, managed services, stuff that's based on the cloud, integration with AI, healthcare-related IT on a global basis looks interesting to me. We're looking at the energy space. I tend to be a contrarian investor. I look at things that are been beat up or not. The hot money's not chasing them. My brother does some momentum trading for us. My investment partner does growth at a reasonable price. I try to always look at value and turnaround situations, or something where there's a takeout, like a cybersecurity type play or a antivirus type play, because it always seems like companies scale and then they get taken out by big players.
Well, great. So you've been investing for some time. What's your advice for people that are investing in startups? What do you advise them to do before they write that check?
I like to do a 3-pronged approach. I do it on public companies. About 80% of our portfolio, 75% is public, 25% is private. My direct investment partner was an early investor in Vantage. I think you got to look at key management. Management is key in a startup environment. If you got a great executive, usually they can execute on a business plan. It doesn't matter where they come from, but do they have a track record? Have they delivered results in the past? That's what I want to look for. I want to see that the growth is there. Eventually, even Amazon made money. So you got to look at how fast is the growth of a startup. If they're growing 40, 100, 150% a year, eventually, if they do all the right things, they will gravitate their way towards profits. And then hopefully the executives are not taking too much money out of the business and they're pouring it back into the business. We're so keen on getting companies incubate and start up in the New Mexico marketplace that we're in the process of acquiring some real estate and creating an incubator accelerator here in Santa Fe, New Mexico as well. Reviewing and doing some due diligence on some fast growth companies in the space. One of the guys is extremely good and has been doing the same thing in Asia for the last 20 years.
Well, great. And then so on the other side of that table, how do you coach startups? What do you tell them to do before they launch their business?
With a startup environment, I've worked in big companies and startup environment. What you have to do is try to take market share, right? You got to get a client not afraid to start up and have a vested JV interest in your business. And if they believe in your business, then other people will believe in your business. I helped a startup out of Phoenix about 6 years ago. I tried to launch them into companies like Neighbors Industries, Avnet, etc. A big enough client where they were already doing business with Thrifty car rental, and then they were also trying to do business with Avis Hertz Group. You got to make those executives feel comfortable that they're doing business with someone that's going to be there for the long run, and showing them your background and your bio, etc., and what you've done successfully in the past in order to get themselves to that next step. Usually, Polaris Advisory comes in after the growth capital is needed, more like an A round, after the company's gotten some traction. And then I'm like usually the first institutional investor come in to raise, between $1 million and $5 million. Usually the groups that are good, I notice, have a good, strong team behind them. It's not just one executive, but it's 3 or 4 people that are all on the same page. It's the CTO is on the same page. The COO is on the same page. Their attorney is on the same page. And you want to make sure that team executes well together as a cohesive team. I think that's what makes a difference in certain startups. And certain startups are picking environments where there's a rich targeted area. And they tend to go after stuff that makes sense for them to add a lot of clients and customer base quickly. That seem to be the most successful that I see.
Well, great. So let's talk about the state of investing in startups. How do you see the industry evolving, and what changes do you see coming up?
I'm an early investor in Cisco and Alibaba, and thank God for the bigger technology companies, because John Chambers just spun off and he's doing J2J, which is he and his son are backing up startups and venture-based scenarios, because they know that it's not just the Silicon Valley. Everywhere in the country has some type of startup environment. And what's happening is the private equities are chasing bigger and bigger deals, and the venture capital people are finally mature enough. They've had 20, 30 years experience. So they do have some wins with some big Alibaba type investments, or something that did really well for like the Kleiner Perkins of the world, or some of the Mayfield funds and some of the more senior venture firms. So they're willing to take more of a risk on some of these smaller startups. And I think that's where the beauty is. And I think people are starting to realize that you can do everything ubiquitously and virtually. So you can launch and run a company like we do. We have people in the UK, we have people in Southern California, in the Bay Area, out through Florida, etc., in Hong Kong. So we're running our offices pretty much virtually all over the world, and we're doing millions and millions of dollars worth of transactions without a bunch of real estate. We have specific real estate investments that we use for the incubator and for our own investments, because our family offices own very concentrated real estate investments. But we don't own real estate just to launch a startup unless it's an incubator type process, if that makes sense. And I think that's what companies need to do nowadays too. You can run a multi-million-dollar business out of Starbucks nowadays.
It's amazing how much you can do with just a laptop and a Starbucks. So
yeah, all you need is a high-speed connection, a laptop, and some drive and some relentlessness.
Great. So let's talk about your investment thesis for your investing. What do you look for in startups, and how do you make decisions about it?
I'd like to see what the executives, I'd like to meet eye to eye, face to face with the executives. I'd like to see their financials, full disclosure on their financials. I'd like to see what marketplaces they're in, and do they have some of the same relationships I have? So my take would be, hey, if you've been doing business with Accenture or Wipro or Cognizant or IBM Services, Global Services, then we may know some of the same clients, and I may be able to help you execute and deliver results faster. So that's what I look for. And it's got to be an industry that I'm comfortable with and we follow, we understand. My executives have about 150 years experience. So if they don't have understanding of certain areas, we wouldn't likely invest in that area, right? And one of the toughest areas to invest in, which is highly, highly growth oriented, is biopharma. But the PhDs and MDs don't understand it. So how am I going to invest in it? So those are like, the IDEC bioscience companies of the world. And unfortunately, those groups always need capital too as well. So they're very highly capital intensive. So those are only some of the areas I wouldn't invest in, but most things we'll take a look at it, especially if we understand it well. It's technology, telecom services, software-based, cloud-based, and managed services. All that stuff makes sense to us.
Can you talk about one or two startups that fit that thesis that you invested in?
Well, we invested in Vonage early on, and we sold on the IPO. We also invested in a couple groups here in New Mexico that are smaller size. And I'm trying to think what else we've invested in. There was a small company that's now public that we invested in early on called New Tech Services out of New York City. And the CEO is on TV all the time, so people would be familiar with it. It's Barry Sloan. But we invested fairly early in that company. Mobile Mini, which was really a rental company that went public. That was a company I was involved with early on. One of my executives that I knew from Prudential Securities invested in that company at between $1 and $3 a share. And that's now probably $20, $30 stock. So, but those would be ones that people would recognize. The rest of them are waiting to be taken out.
Right. Well, those sound like some great ones there. So you see a lot of startups in the space that are launching and growing and so forth. If you had to call out one or two challenges you think most of them face, what do you think that is?
I think a lot of it is executive burnout, just doing those 70-hour work weeks, 80, 100-hour work weeks. I think that's part of it, and not having a good team behind them to replicate themselves. One of my executives said very early on, here's the best advice I think I've ever gotten. Thomas, don't be afraid to delegate as much as possible. Otherwise, you won't get anything done. And so sometimes some CEOs have a tendency to want to oversee and work on everything themselves. You can't do that. It's not realistic. So as far as they need to have a sales and marketing team, they need to have a CEO, a COO, an operational COO, and they need to keep all that stuff in perspective and not try to do everything themselves. And I know it's tough, but there's some really good people out there that are not fully retired that still want to be engaged.
Well, that's a good point. Good point about the burnout. We see that a lot given the amount of time and effort that goes into startups and how long it takes as well.
And I think sometimes we do some film financing as well. At the end of the day, you can't quit your day job, right? You have to launch your company. You know who's the perfect example of the absolute best startup and the best person that was not technology? That is Susan Blakely, who came up with Spanx. She did not quit her day job as a printer copier person. She kept running, doing the printer copying, made the big win of landing Neiman Marcus on a fluke, doing things outside the box. I really agree with how she does things. She said to the Neiman Marcus buyer, I'll be in Dallas next week. Can we meet at 4:00 for 35 minutes? That's all I need. And I'll show you what I'm doing and you'll get it. And the people in the industry said, that's not how you do the business. You go sit in a booth, you pay $20,000 at Jacob Javits Convention Center, and you hope to God Neiman Marcus shows up at your table. Well, if you do everything conventionally, you'll end up with conventional results. Susan Blakely is now a billionaire, and she launched her company extremely well for the fact that she did things out of the box, and she didn't quit her day job until the company was making $100 million in sales. I think that's the answer. Now, can everyone do that? I don't know, but obviously that works well for her.
That's a good point. So you see a lot of applications and sectors out there. Do you see any immediate opportunities for investors to pursue? Maybe where do you think would be the top one or two?
Everyone talks about AI, but I have a friend that graduated from MIT back in the 80s, and AI is finally becoming mainstream. But AI, along with digital applications, I think that's where the growth is. I think that's what the next step is. A lot of people talk about it, but big companies are doing it, small companies are doing it. Everyone is trying to make themselves more efficient. So that's where things are. If you can have some expertise that you don't have to, that can work on projects on a 24/7 type of priority, I think that helps tremendously. Any kind of virtualization, like I talked about before, you can do all kinds of software development virtually. You can do all kinds of launches of applications. Some of these app businesses, that there's high growth there. People are buying these things where there's just, a website and a couple operational people behind the scenes. So I think those are interesting.
Well, great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
When people want to look at stuff, they can't be afraid to be a contrarian and look at companies that are about to go public, or looking at startups that are changing the way we do business. Like we were saying, you can run a business out of Starbucks. If you had seen Starbucks early on, you would have realized that that's the new trend, that you don't need an office. So look for things that you see every day. It's different from the way people are doing things now. The venture capitalists of Sand Hill are always looking at things that are disruptors, right? Disruptors are the wave of the future. How are you doing things in the future that you're not necessarily doing it the same way today? I think that's the big thing. And you know who I think is the most brilliant person in the world is Mark Andreessen. If you listen to what he's saying about Amazon dropping boxes in your backyard with their own drone technology, that he sees things coming before anybody else. And I'm a little clairvoyant that way as well, but not as brilliant as he is. But he definitely is one of those people that is out there and sees trends. And Mark Cuban is really good about seeing trends too. Look and see what they're investing in and try to ride their coattails. But you can't always do it because they're doing some big institutional type investments, but you can do it on a smaller basis. And I think those are the two people I think stand out of, hey, this makes sense, do this.
That's a good point. They're very successful investors, and they often have access to information the rest of us don't have. And so it's very interesting to watch what they do and see what direction they think it's going to go. Some of them are very good about blogging and telegraphing what they're seeing and thinking about, and others are not so much. So it's a good idea to learn from the others as best we can.
And a good way to follow those people is either via LinkedIn or on Twitter. They do tweet out, and you'll see what they're doing and what they're up to. As an investor, as a disruptor, Carl Icahn does a really good job as well. You can see he sees value before anybody else does. He and I were looking at Xerox years ago, and Xerox is finally trying to clean themselves up after the ACS acquisition. So it's people like that are billionaires, and they're good, and they do it over and over again. And they're not afraid to roll up their sleeves and do some work. I think at the end of the day, startups have to have that mentality. You got to roll up your sleeves and get the work done, because if you don't, nothing's going to happen. It's up to you. And if you don't like change, don't invest in startups or be around technology. That's what I've always told people. That if someone is mentoring, if you don't like change, don't do technology whatsoever, because it changes daily.
That's right. That's the one constant is change.
Embrace change.
Yes.
Right. Embrace change, because change is good. And some people will say to me, Thomas, your big executive just left IBM. How does that affect you? And that's a break for me, because hopefully they'll start up a new company. That's what we want. We want people to scale with a big company, leave the big company and start another company, maybe start 3 companies. Serial entrepreneurs are dying breed in America unless they're coming from overseas, and we need more of that as well.
Well, absolutely. Well, appreciate your sharing these thoughts today. How best for listeners to get back in touch with you?
You can reach me at my email at thomascali531@gmail.com. And we always, when we look at startups, we're looking for EBITDA from day one. If they have EBITDA from day one, or their experience in the past and they've monetized before and they've got some liquidity or family liquidity, that's the best ones, because we know we're betting on the jockey. And if the jockey's successful, we know the jockey will make it somewhere else in another race with a different horse.
Well, those are the best ones, experience with revenue, for sure. But appreciate you taking time today. Hope to have you back for a follow-up soon, and looking forward to catching up with you again in the near future.
Paul, thanks again for your invite, and I highly appreciate your time today, and I appreciate your audience.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.